Welcome to Simplified and thank you for tuning in. Today I'm going to be teaching on accounting for issue of shares. The course has been split into three lessons. Lesson 1 will touch on issue of shares at par and at a premium. Lesson 2 will touch on issue of shares at a discount. And lesson 3 will touch on forfeited shares. Definition of terms. Issue of shares. This is a process where a company makes available shares for sale. Par or nominal or face value. This is the value of each individual share as shown on the share certificate. Point to note, shares are always recorded at par in the company records. Share premium. This is where a share has been issued at a price higher than the nominal value. For example, a share of $1 issued at $1.60. 60 cents is the share premium. Share discount. This is a direct opposite of share premium. For example, where a share of $1 has been issued at 90 cents, 10 cents becomes the share discount. Issue of shares. When shares are issued, there is an over or under subscription. This is where the number of shares in issue are not in tandem with the number of shares applied for. Oversubscription. Example, where 15,000 applications are received, where 10,000 shares are in issue. Under subscription, for example, 8,000 applications received where 10,000 shares are in issue. Payments for shares issued. Payments for shares issued can be done once in full. Payments can be done in installments, that is application, allotment, first, second, and final cost stages. Accounting for issue of shares entry notes. Application stage. Credit application account and debit bank account with all the application monies. Debit application account and credit bank account with any refunds at application. Debit application account and credit share capital account with value of shares required at the application stage. Allotment or core stages. Credit allotment or core account and debit bank account with the monies received for that stage. Debit allotment or core account and credit share capital account with value of shares required at that stage. I have put out an illustration that we are going to use to put in practice these accounting entry notes. Illustration 1. AB Limited issued 10,000 ordinary shares of $2 each, payable 25% on application, 40% on allotment, and 35% on first and final call. 12,000 applications were received and 2,000 applications were returned. Assume all conditions were satisfied, record ledger accounts. At this juncture, I encourage you to pause this video and try to work out this illustration using the accounting entry notes shown in the page. So to answer this illustration, I have prepared the solution. However, I have juxtaposed the question with the accounting entry notes with the solution so that we are able to see where our solution is coming from. But before I show the solution, maybe it's quite important that we get to understand what exactly the question or the illustration wants us to work on. First, we are told that the company issued 10,000 ordinary shares of $2 each. Remember, we said ordinary shares are always recorded at par. So what it means, our ordinary share account will be 10,000 multiplied by $2. That's $20,000 will be recorded in our ordinary share capital account. We are told 25% is payable on application, that's 25% of $2, 40% on allotment, 40% of $2, and 35% of $2 is paid on first and final call. 12,000 applications were received. That means there was an oversubscription. We received more than we had actually offered in the market. Therefore, the company returned 2,000 applications. So we are going to apply these accounting notes into the solution. First, ledger account. we are going to prepare the application account. So our first accounting entry note says credit application account and debit bank account with all the application monies. So here we go. The application monies, we received 12,000 applications. So we are simply going to credit application account. Here's the credit entry with a narration bank. 25% multiplied by $2 multiplied by 12,000 application receives will give us $6,000. With debit bank account, this is a double entry. We simply go to bank account, application monies, the narration, $6,000 in the bank account. Next accounting entry note, debit application account and credit bank account with any refunds at application. With debit application account, narration, refund, 12,000 minus 10, that's 2,000. We multiply that by 25%, multiply by $2, we get $1,000. Already our application account is balanced. So a point to notice, the application account, allotment account, and the first and final core account, they always balance no matter what stage we are on. So the double entry for the refund, we go to our bank account, we have our double entry, a credit in the bank account, narration, application, refund for $1,000. Next accounting entry note, debit application account, credit share capital account with value of shares required at the application stage. So remember we said our ordinary shares are always recorded at par. So at this point, only 25% of $2 was needed. So we debit application account with a narration ordinary share capital, 25% multiplied by $2 multiplied by the 10,000 ordinary shares, we get 5,000. Double entry, we credit share capital account with application monies as the narration as shown here, $5,000. Next accounting entry, we go to the allotment stage, credit allotment account and debit bank account. There is the accounting entry note. Allotment stage, we are told that 40% was paid on allotment. So we simply credit allotment account, narration bank, 40% times $2 times 10,000 will give us $8,000. Double entry, we debit bank account with the narration allotment monies, $8,000. Next accounting note, we are told debit allotment or core account and credit share capital account. There is the accounting note. So we are going to debit allotment account, narration ordinary share capital, 40% multiplied by $2 multiplied by 10,000, we have $8,000. Double entry, we credit ordinary share capital account with allotment narration, $8,000. Next accounting entry, we have to look at first and final core. We are told 35% was paid on first and final core. So the same treatment as per allotment account, we simply credit first and final core account with monies received. So our narration will be bank, 35% multiplied by $2 multiplied by 10,000, we get $7,000. Double entry, we go to bank account and debit bank account with first and final core, $7,000. Next accounting note says we debit core account and we credit share capital account with value of shares required at that stage. So we debit first and final core account, narration ordinary share capital, 35% times 2 times 10 gives us 7,000. Ordinary share capital, double entry, we credit it with 7,000. So we are done with the accounting entries as per the accounting notes. As I said before, the share capital account will be recorded with the number of shares multiplied by the value of each individual share at par. So that will be 10,000 multiplied by 2 to give us 20,000 as shown here, our balance brought down. Application account, balance is off. Allotment account, balance is off. First and final account, balance is off. We go to the bank account. Basically, the bank account is naturally an asset, so it normally should have a debit balance. In this case, we add our totals on the debit side, we get 21,000. We subtract the 1,000, which is the refund. From 21,000, we get 20,000 becomes our balance brought down. In the event that we have a credit side balance brought down, that means the bank account is in overdraft. So if we were told to prepare a balance sheet extract, we were going to have current assets bank account with 20,000. On the equity side, we would have share capital with 20,000. So basically, that's it with recording accounting for issue of shares at par. Next, we are going to look at share premium. Share premium accounting. Basically, share premium accounting is the easiest part of all this tutorial. Why? Because we only need one entry for share premium accounting. We need to debit the application or allotment or core account with the value of the share premium and credit share premium account. The share premium account may be paid on application or allotment or core depending on when the company wants part of the share premium. Application and allotment account. This is an interesting section for examiners. Rarely would you find in an examination where you are asked to prepare a separate application and a separate allotment account. Ideally, all that is needed here is for you to combine the information that you know on application account alone and the information that you know on allotment account alone, and put this information together into the application and allotment account. You need to credit application and allotment account with all the application and allotment monies received and debit bank account being the double entry. You need to debit application and allotment account and credit bank account with any refunds at application. You need to debit application and allotment account and credit share capital account with value of shares required. Point to note. Allotment monies received will be less the advance received at application. Normally, when shares are issued, there is an oversubscription. So when there is an oversubscription, companies may decide to hold on to some of those monies that are the excess monies, which will be distributed to the allotment monies when they are needed. So when we are preparing this application and allotment account, we need to take note of the excess monies that were received on application but was not returned to the applicants. Illustration 2. AB Limited issued 20,000 shares of $2 each at $5, payable $1.20 on application, $3.40 on allotment, including the premium, and 40 cents on first and final call. 27,500 applications were received, 2,500 applications were rejected, and the remainder was allotted on a 4 for every 5 applied for. Assume all conditions were satisfied. Show the following ledger accounts as they would appear in AB Limited accounts. Application and allotment, first and final call, ordinary share capital account, share premium account, bank account, and balance sheet extract. At this juncture, again, I encourage you to pause this video and try to solve this illustration using all the information learned before, so that we can see how far you can go. I have prepared the solution. Again, I have juxtaposed our question together with the accounting notes that we need to solve this illustration. Maybe before I show the solution, we might need to take note of the important points in this question. We are told that 20,000 shares were issued. Remember, we said ordinary shares or any shares, they are always reported at par. So our par value is $2. So it means our ordinary share account will have a balance of 20,000 multiplied by 2, which is 40,000. We are also told that the shares were issued at $5. Already we can see that there is a premium of $3. 5 minus 2 gives us $3. The shares were payable $1.20 on application, $3.40 on allotment, including the premium. We already know premium is $3, therefore 40 cents represent the value of ordinary shares required at allotment. The other part, which is 40 cents, was received on first and final call. We are told 27,500 applications were received. There is an oversubscription here. We are also told 2,500 applications were rejected. So that means we remained with 25,000 applications. And the remainder were allotted on a 4 for every 5 applied for. If we say 4 divided by 5 multiply by the remaining applications, which is 25,000, we will get back to the issued shares of 20,000. So ideally, we can see that there is an excess on application of 5,000. 25,000 minus 20 will give us 5,000. So we will need to take note of that 5,000 when we are calculating the monies received on allotment. 5,000 applications multiplied by $1.20 being the money that was required on application must be subtracted from whatever money we were supposed to get on allotment. Now, assume all conditions were satisfied. Show the following ledger accounts as they would appear in a B limited accounts. We already have the knowledge on what needs to be done on this illustration. So the solution will be as follows. So we are going to look into our accounting notes and see how each accounting note was applied to the solution. First, we are going to look at the application and allotment accounting. We are told to credit application and allotment account with all the application and allotment monies received. So we go to the application and allotment account. We credit the account with application monies received. So the narration will be bank. 27,000 applications were received at $1.20. That will give us 33,000. Double entry, we go to the bank account. There is a debit entry application, 27,500 multiplied by $1.20 to give us 33,000. We are also told that credit application and allotment account with all the application and allotment money received. Ideally, when you are looking at the application and allotment account, you are encouraged to please separate these monies received in this account so that you will be able to take care of the excess application monies. This is how you are supposed to present this account in an examination. So we are going to record the allotment monies with a bank narration on the credit side of the application and allotment account. 20,000 shares multiplied by $3.40 being the value that was required on allotment, less the excess monies received on application. 5,000 multiplied by $1.20 will give us 62,000. Double entry, we record on the bank side, debit side of the bank account, allotment 20,000 multiplied by $3.40, less excess monies on application, 5,000 multiplied by $1.20 to give us 62,000. Next, accounting entry note. Debit application and allotment account with any refunds at application and credit bank. We are told 2,500 applications were rejected. So we have a refund of 2,500 multiplied by $1.20 to give us 3,000 on the debit side of the application and allotment account. Double entry, we credit bank account with the same information to give us $3,000. Next, accounting note, debit application and allotment account with value of shares required and credit share capital account. So on the debit side of the application and allotment account, we have our narration here, ordinary share capital, 20,000 multiplied by $1.20 plus 0.4, which is $1.20 required on application plus the 40 cents here. We are told $3 is the premium, therefore 40 cents is for the ordinary share capital. That's why we are getting $1.20 plus 40 cents to give us $1.60. We multiply that by 20,000, we will get 32,000. Double entry, we credit ordinary share capital account, application and allotment 32,000. Next, accounting note, share premium accounting. We simply debit application and allotment account and credit share premium account with the value of share premium. Already in the application and allotment account, we are told $3 is the value of the premium. So 20,000 multiplied by 3 will give us 60,000. In the share premium account, double entry on the credit side, application and allotment, 60,000. Next, we will go to the first and final call. We are told 40 cents was received. So we will simply credit. Remember, we said treatment on the allotment account is almost the same as what we do on the first and final call. That was in the previous illustration on par. So we go to the first and final call. Credit side, narration bank, this being the monies received on first and final call. 40 cents multiplied by 20,000 will give us 8,000. Double entry, we debit bank account, first and final call. 40 cents times 20,000 will give us 8,000. Next, we need to record the ordinary share capital value received on first and final call. We debit first and final call account and credit ordinary share capital account. So ordinary share capital, 40 cents times 20,000 will give us 8,000. Double entry, ordinary share capital account, we have our first and final call narration to give us $8,000. So like we said before, the application allotment account, the first final call accounts, they always balance off. So we can see that our application and allotment account is balanced off. Our first and final account is balanced off. We go to the bank account. If we add 33,000 plus 62,000 plus 8,000, we get 103,000. On the credit side, we have 3,000. If we less that from 103,000, we'll get 100,000. That becomes the balance brought down in the bank account. Next, we go to the ordinary share capital account. Remember, we said our ordinary share capital is always recorded at par. So we say 20,000 multiplied by 2, we get 40,000. Just to confirm if we did our accounting entries correctly. So we can see we have 40,000 here. 32 plus 8 gives us 40,000. So our ordinary share capital account is okay. Our share premium account is 60,000. Lastly, we need to prepare the balance sheet extract. So the balance sheet extract, statement of financial position extract. On the equity side, we have share capital 40,000, share premium 60,000 to give us 100,000. Then on the current asset side, we have the bank account as shown here with a balance brought down of 100,000, which shows that our balance sheet extract is also in balance. So basically, that is it with share premium accounting, as simple as it is. So this is where our lesson ends. I would like to thank you for tuning in. And please don't forget to subscribe so that you will be notified when the next lesson is uploaded. The lesson 2 is going to be on share discount. Please, if you like these lessons, don't forget to click on the like icon and share with your classmates and stud buddies. Otherwise, cheers and goodbye.